Hello, and welcome to another update video about FET, FETCH.AI. Still here in a structure in which this third wave could complete at any time. The support area that I mentioned to you in the last video doesn't even need to be adjusted. The price hasn't moved much, but FET has performed really well over recent weeks. I currently, and have been doing that for the last few weeks, I see tentatively the low as being in here on the 18th of August in a wave 2. And we could now be in this larger degree third wave that we discussed in the previous videos. You can see it actually on the screen. Third wave, yeah. After we have a 1-2 setup complete, this third wave could now be in the making. Of course, it all depends on how well is the pattern going to be filled in by the price. The more of this pattern can be filled in, the higher the probabilities that we will also further move with this pattern and structure. At the moment, we have 3 waves up of the last low, of the August low, and we've already nearly moved above the wave 1 high. So that actually is quite bullish, yeah, because with that move, which basically tested the February high, the move up is too high to be a reliable corrective wave. So it's rather suggesting that we indeed are in an impulse higher, but only 3 waves up so far. So in any corrective pullback now, we might see a buy opportunity or entry opportunity. The closer to support, the better, the higher the reward to risk ratio. And then we should see one more high. So basically the idea, the base case is that we are now in this third wave here. Might take us to, well, $8 approximately. It's a bit too early to really confirm that. We can do that better with more clarity once we have wave 1 in wave 3 completed. So these 5 waves here, yeah, when they fill in, then we get a 3-wave pullback. And if we have that pattern complete, we can calculate better the targets of the subwaves 3, 4, 5 within the larger degree third wave. At the moment, it seems like we're filling in wave 1 of 3. So let's zoom in. Could it be something more bearish? Of course, that's why we track support. As long as support is holding, we can carry on focusing on the current structure, focusing on the current thesis, okay? The idea here in wave 1 is that this is a leading diagonal in a larger impulse. Why is it a leading diagonal? Well, this move up here initially between August and early September looks like an ABC structure. Also, this move up doesn't really give me a very clear structure to work with when I'm talking about or when I'm looking at the microstructure. So also here, I would suggest it's an ABC structure. And then we should see a wave 4. I mean, again, here the message, if it's a wave 4, ideally it doesn't break below 33.9 cents or it will lose any impulsive characteristic. So I cannot rule out it's an impulse, but I haven't got a very good view of the microstructure. So I have to consider a diagonal might unfold. So we might have to allow it to go lower than just the 50% FIB level. It's just that the 50% FIB level is a level where, if the price breaks below it, it will get less reliable. And then most certainly is an impulse, is not an impulse, but at best a diagonal. And we cannot really trust diagonals. So I want to say and communicate that really ideally that 50% FIB level is holding. If it has to, and the 50% FIB level isn't enough to correct the previous increase, well, if it has to, then it can use the 61.8 retracement level, and that would be at 29.9 cents. But below that, also in a diagonal, this wave 4 would be too deep to be reliable. So that means we would then need to just watch and see, wait and see. Could be anything then. It would be a 3-wave top, which we want to avoid, okay? So we're tracking here for the possibility of 5 waves. Ideally, it stays above 33.9 cents. Okay, if it needs to, it can come down a little lower, but certainly it shouldn't go below 29.9 or things will really get more bearish. And yeah, as long as this support is holding, we can watch for a 5th wave to the upside to form a larger degree wave 1. Then afterwards, we should see this wave 2 pullback. Where should that wave 5 land? Well, that's a bit tricky because we need the wave 4 low in place to really calculate a target for wave 5. However, what we can use are the Fibonacci extensions of this larger degree 1-2 setup. This gives us the extensions that would be ideal for circle wave 1 of the larger degree third wave. What I would like to see is that the price moves towards 75 cents. That's the 61.8 extension level. And ideally we are forming 5 waves before the price breaks above it. Okay, if it has to break above that, then there's one more level, $1.14. And as long as that level is holding and not broken, I'm still watching for, I still see this as a wave 1. If we break above that level, then I would assume we are doing the third wave more directly without any further subwaves. We use the Fibonacci levels to know what is the most likely wave count at any given time. We know that if the price in a wave 1 breaks above the 78.6 extension level of the previous wave 1, yeah, then it's likely not wave 1 of wave 3. It's something different. And it could then be that we're just doing this third wave in a straight line. It's not preferable. Yeah, it's not good because it also increases the risk that the market will overheat a little bit quicker. Nevertheless, support levels I think are defined. The next targets are defined as well. And just be aware that this wave 1 high that was made in February is also a key structural resistance level. So pay attention to that level as well. Yeah, that's my update about FET. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.